This is Walter, and you're here at the live Naked Forex Trading webinar. Just wanted to make sure that everyone can hear me okay. I notice we have, thanks Gabriel, thanks Ian, excellent, great, thanks 60 Minute Man, Pan on Fire is here, crystal clear says Jeremy, Manuel, Kate Chan, Deruve, Edward, what's up Edward? Awesome. All right, let's get started, guys. So my name is Walter Peters, and you're here at the Naked Forex webinar. As you know, we like to talk about trading without indicators here. Not that we have anything against indicators, it's just that we can do just fine without them. So today's session is really all about trading the live setups, and I can show you what I'm in and what I'm looking at, and then we can go. Yeah, I'm a little bit tired, Edward, just a tiny bit. But you know, having a 4-week-old will do that to you. So let's take a look. I've got silver, and I went long this kangaroo tail there, and it's really done nothing since then. My stop's down at 1975. My buy order was at 23.25. I'm trading 26.50, which is just this little jig right here, and then 28.20, which are all these lows line up right there. Same thing with gold. Gold actually is starting to show its hand a little bit better. If you're in the Daily Trader, I sent you I just uploaded a video, although I didn't send the alert out. I didn't have time before this webinar, but basically I did talk about gold and how it's bouncing. What normally happens, it's not foolproof. What normally happens when you get these bounces is you get a bounce on the trend line and it's squeezing up against the horizontal level. It usually means that we get the upside breakout here. So I'm looking for the upside breakout. Yeah, thanks, Pan. Yeah. Anna says nothing better than Anna says nothing better than a newborn. Agreed. And Edward says, I have a 6-month-old, I understand. Yeah, right. Exactly. I guess maybe teething comes to mind, Edward. Okay, so what I'm looking at here is a breakout. We actually have a very, very similar setup on the pound CAD. However, this is what may end up with what we may call a fake out. If the pound CAD closes something like this, then what we have here, the traditional thing that happens here is, and it's not 100% foolproof, but usually it'll ride this trend line, squeeze up against the horizontal level, and then squirt out to the upside, because it just squirts out to the horizontal level. It's the collision of two worlds, and what we see here, 1 hour into a 4-hour candle, so this can drastically change. But what we see here is that this looks like it's a fake out. And so we would look for it to collapse. Now, we don't have that on gold yet. Gold's just sort of riding it and still hasn't made that last move up to squirt upward. So, but I would expect something like we saw there on the pound CAD where it squirts upward. Now, I don't know if it'll come back and collapse like the pound CAD is currently. But again, the pound CAD has 3 more hours to go before we see what's going to happen with that 4-hour candle. So a lot can happen. In fact, usually a lot does in the last 20 minutes of a 4-hour candle. So, and the other one is I want to sell the Aussie when it gets to 96, 95, 90, somewhere around here, and if it gives me a really nice red candle. Remember last week, if it gives me a really big red candle, I'll sell off that red 1-hour candle, and I'll either put my stop above that red red 1-hour candle, or my stop would be at 96.40, which is hidden just behind these candles right there. It depends on sort of what the candle looks like. If it's a tiny candle, like say like this one, then I'll probably stick my stop up here. If it's a large candle that closes right on the low like this one, I'll probably be happy just putting it on the other side of the candle. So I don't really know what to say other than that. It's just kind of a feel thing where, you know, if the market looks like it's definitely showing its hand, like the pound CAD. If the pound CAD closes a 4-hour candle like this, well, we know it would be highly unlikely for it to go high after that. this would be a failed breakout, like no doubt. So, you know, if we get some sort of candle like this on the 1 hour Aussie, I am happy to just go ahead and ride that one candle. If it's sort of a half-hearted red candle like this one, then I'll probably just use my 96.40 stop. Does that make sense? And does everyone see why I want to sell it here? 96 is a great level because it bottomed out there, came close down here. It also bounced on the 23rd over there. I think if you look at the 4 hour, what you'll see is a pretty wicked kangaroo tail here that printed right there, right off my last targets. I sold here at 97.45 with a stop at 98.30, targeting 97 and 96, 97.05 and 96. Then it just kangaroo tailed off my target. The kangaroo tail actually went lower than 96. It went to 95 and 92. But why would it bounce off 96? Because this is something that, you know, if you're new to naked trading, why on earth did I have 96 as a target? After all, price hasn't been at 96 like, you know, in forever. Well, clearly, you can see last May 25th, no, sorry, this is June 1st, it kangaroo tailed off 96. And if you go even back further, what you'll see is 96, there was a nice bounce here. Didn't really hit it there. But going back in time, you'll see that 96 has repeatedly been a nice level. It was resistance back here, became support with a trendy setup there. So clearly, 96 is an important area. I don't think we're going to find anything beyond 2010 on 96. So there you go. So those are the setups I'm watching right now. Oh, also the euro pound was looking last week like it might give me a nice sell off this low, and it never broke this low. So it came close a couple times, but never really sent further than this low. So I think I'm not going to take that trade either. I'm just going to, I think actually my numbers on that one are over here. I can show you guys. My numbers are right, I think on this one. Let's see. Yeah, here it is. Yeah, there it is. So I was selling at 85.29 with a stop at 85.99. You can see this was the closest it came, but that was last week. No, sorry, that was this week, and it went as low as 85.34, so it just missed it by 5 pips. Lucky, too, because it looks like it's going pretty bullish now. So I'm going to pull my order on that one. That doesn't look so hot. Euro CAD was another one I was watching. If the Euro CAD doesn't trigger my sell order, does everyone see why this is a sell? Nice kangaroo tail. If you're a Fibonacci fanatic, you can see here that it printed out the 61.8% retracement, also right off of all these lows here. So I waited for a 33.12 sell, and it's gone up the last 3 days. Yesterday was the closest thing to sort of petering out, and then today it's going back up. Now this could totally reverse, and it could come down and trigger my order today. But that's about the only way that I'm going to get in this trade is if something happens during New York and this completely collapses and triggers me. Otherwise, tomorrow I take my order off. Now, hey Colin, good to see you here. Edward says that the euro pound had a triangle breakout on the daily. Was it? Right, yeah. So kind of like a little flag thing, yeah. It might be kind of hard to see for some people, but basically, I think this is what Edward sees here. Something like this. Sort of a constricted. Gabriel says he took a big shadow on the 4-hour CAD yen. Let's take a look. Where the heck is the CAD yen? Oh. So I don't have CAD yen on here. See, I've got my new charts up, and the old favorite CAD yen isn't on here. Well, that's not very good. That's pretty bad, isn't it? There it is. I thought I had CAD yen on here, but I've been missing out. Let's see. 4-hour, you said, Gabriel? Let's see. All right, so you took a sell. If I had to guess, I'd say you took a sell right here, yeah? Right there. Yeah, right. Cool. And you're actually right on if you have not cashed out, my guess would be you're really close to being cashed out right now. Like I would move it to break even. If I were in this trade, and you'd be up. If I took this trade, I'd be up roughly 49 pips, 50 pips. The risk was about 70 pips, 72 pips, and so I'd probably be looking to either get out in about 15 pips, or still holding on at break even. Dhruv Sangvi says, "What is a big shadow?" It's basically a special case engulfing. So are you familiar with engulfing candles? Dhruv? No. Okay, so this is what it is. All right. This is good because for people that haven't seen this. Also, if you want, just email me. I'll send you the book. Walter@fxjake.com. I'll send you the book, okay? There's a book called The Big Shadow Book. Ask for it, and I'll send it to you. But basically, there's lots of examples and rules. What it is it's a two-candle formation. Ideally, you want to see this at a level where the market's reversed historically. So you can see here we got a reversal here, and it came really close here with this wick. But other than that, it's not really, to me this wasn't an ideal place for it. It was pretty good. It would have been nice if it was just slightly higher. But anyway, it got up to here and it started to peter out. Maybe Gabriel was looking at some sort of trend line here or something like that, in which case I can totally understand, because you'd be looking at maybe something like this. And what happens with the big shadow is it's got a higher high and a lower low than the previous candle, and it engulfs it. Okay. Now I look at wicks. A lot of people just look at bodies. I look at wicks. So because it's got a higher high and a lower low, and it completely takes out this candle here, and then I wait for the next candle to trade lower than that big shadow candle, and that you can see that's what's happened here. So that's a big shadow. That's in a nutshell what it is. Some traders just trade engulfing candles. So let's see if I can find an example. So for example, see, this candle right here would be an engulfing candle. This red one would engulf the prior one, but it wouldn't be a big shadow for me. Crazy, I know, but because, see, the wick on this red candle is lower than the wick on the green one, so the green one actually has a higher high. So for me, that would not be a big shadow. Also, ideally, your big shadow is the largest candle you've seen in the last 5 or 6 candles. And I know I say 5 or 6, but really, here's another one. Some people might take this as a buy trade, this green one, but for me, because it didn't have a lower low on the green one, it's not a completely engulfing candle. So the rules of the big shadow are it completely engulfs the prior candle. It's usually at a level of historical significance. In other words, the market's reversed there repeatedly. And finally, the next candle should trade lower. Also, it should be the largest candle in some time, ideally. Let me show you. Oh, this is a great one right here. This would be what I would call an A-grade one right here, just based on what it looks like, not on the result, although the result was obviously quite good. Here we have a candle, this 4-hour CAD yen, which is a great pair to trade. I love the CAD yen. 69 pips wide, which means it's bigger than the previous candle with a higher high and lower low. The next candle actually traded lower, so that would have triggered my order. Stop loss goes above the big shadow. And you can see we've got 1, 2, 3, 4, 5. I think it's probably even bigger than this one. It's bigger than the last 5 candles. Yep, it's bigger than that one too. So, that's ideal when it prints a really large candle, and it's the biggest one we've seen in some time. Here's another. Oh no, that's not one because it doesn't have a lower low. So here's this one would also be an engulfing for some traders who look at the bodies of the candle. But since I look at the wicks, this one doesn't have a lower low, so that wouldn't qualify as a big shadow. Also, ideally, they'll have some room to the left, so there won't be any price action to the immediate left for most of the candles. And you can see here, from about here onward, we see that we don't see a whole lot of price action here until you get to this area here, which was the last touch up here. Pound dollar 5-minute head and shoulders, 15-minute divergence, 1 hour engulfing and going down now. Yeah, I believe that given what the pound CAD is doing, and I'm still keen to watch this in another 2.5 hours or so when it closes. But let's take a look at what Lucas is saying about the pound. So Lucas is saying that I'm glad you learned something new, Drew. That's great. Lucas is saying that the 5-minute pound dollar, which is this one, it's got a head and shoulder. Right. So does everybody see what Lucas is seeing here? So here you go. Here's your head and shoulder. I believe you're talking about the 5-minute head and shoulder, not a 15-minute head and shoulder, right? So you've got shoulder, head, shoulder. This shoulder right here is really like in trouble, but it is, I guess, a shoulder. And so your neckline's right here. Yep, okay. So this is what Lucas is looking at. His neckline's right there, and then he looks at the, I'm going to delete this yellow thing. Then you've got 15 minutes divergence. Okay, I don't know what indicator you're looking at, but let's just go ahead and put the MACD up there. 15-minute divergence. Right, so you've got hidden divergence. Does everyone see that? What that means is that although you've got a lower peak on price, higher peak over here, and a lower peak on price, you've actually got a higher peak on the MACD on the second peak. So the higher peak is on the MACD, but the lower peak is on price. Here you got the lower peak on MACD, but the higher peak on price. That's what's called hidden divergence, and a lot of traders miss that. But obviously Lucas has nailed it. Oh, stochastic. Well, it doesn't really matter to me, Right. Same thing here, actually. You can see this has got a higher peak on the stochastic with this one, and it's a slightly lower peak on this one. So higher price. Oh no, hold on. This price would be higher as well, so that would be in sync. The stochastic is this, but if we look at this peak like we did before, this peak's higher in price, lower in the stochastic. This one's higher in the stochastic, lower in price. Yeah. And then there's also 1 hour engulfing, you say? Let's take a look at that one. See, that would probably be the only chart that I would... Oh, right. Okay, so this is a great example of what we were talking about earlier, where this is actually an engulfing pattern, but for me it's not a big shadow. Why? Because the wick just missed out. Now, I often will overlook that, but strictly speaking, here's the thing that's great about this trade. The great thing about it is that the close on the bearish candle was right on the low. The low was 50.45 and the close was 50.46. So it closed 1 pip outside of the low. And it just completely takes out this candle. It's too bad that it didn't have a little bit of a higher wick, because then it would have qualified as a brilliant bearish big shadow. But that's okay. What I would say about this, Lucas, I don't know what your target is, but it certainly seems like this area right here around 50.17 would be probably, that's only 10 more pips, probably be a pretty good place to see if the market pulls back there. If I had to guess, I'd say it's probably going to run into some troubles around there, and it'll at least pause there if it does break through. Yeah. Yeah, a little higher. So you're looking at... Gabriel said there was a belt on the CAD daily. Let's see. The CAD daily. When was the belt? You're talking about Monday. Yeah, there was kind of a belt here. I'll tell you what, though. My favorite belts are the ones that really stick out. And Let me see if I can find one. I don't notice a lot of them on the CAD, to be honest. I notice a lot of them on other pairs like some of the yen pairs and the Swiss pairs. But here's a belt right here. This would be a bullish belt. So what happened was it closed on Friday down here and then at 97.79, and then it jumped up and opened at 12. So it closed at 79 and it opened at 12. That's like 33 pips higher, right? That's a good one. Closed right on the high and then it started trading higher. Those are my, I kind of like those that are kind of away from. Here's another one where the market closed here on this day, which was 2011. It was November 11th. And then on Monday, the following Monday, it opened lower, but then it closed up like that. Ideally, the belts will close near their high if they're bullish and near their low if they're bearish. But certainly, I see what you're saying, Gabriel. This kind of thing, it's just not a lot of pips. So for me, it's not enough for me to take it. Because on Friday, you can see the market closed at 103.15, and then on Monday, it opened at 103.05. So it closed like, it was only a 10 pip jump, What was your question again, Drew? It was, does the next candle in a big shadow have to close lower or just open lower? No. Okay, so here's a big shadow right here, okay, but it's not a good one because the close is kind of weak. Really, the close should be at the edge of the candle. Let's see if we can find one. I'm just going to go to the 1 hour and just find one. Here you go. I just saw one. Okay, here it is. Here's their big shadow right here. All right. So this wasn't meant to be a big shadow webinar, but I guess, it's fine. Boom. Okay. All right. Now, let me just back this up. I'm on the 1 hour chart, and I clearly have an area of support and resistance at 98.79. So I have a touch, touch, bam. And so now, in real time, I'm right here. So I say, self, what do? I say, well, self, I want to sell, and I want to target these lows down here at the very, very least. Now, it could go further than that, but my first immediate target needs to be in this area here, which is probably going to be around 98.56. Now, my next target would probably be down here at this area where these candles all congregate, and that would be 98.45. Remember, it doesn't seem like a lot of pips, but it's a 1 hour chart, so this would be my second target would be down in this area here. All right, so what happens is the market comes up, it hits my resistance area, my support and resistance area. Now, if you look at this over here and go, well, that's weird. Well, actually, to me, it's not that weird because it came up, it couldn't close above it here, still couldn't close above it here, finally closed above it here, then came back down and bounced off it on the way up. That's pretty common. When the market breaks through an area, it'll hit it, can't get through, then it'll break through and then come back down and bounce on the way up. Very, very, very common thing to do, which is sort of the reverse of what I'm looking for on the Aussie. The Aussie broke through the floor, and I'd like for it to come back up and touch it from below before falling further, right? All right, so now on the CAD, what's happened here is it's printed a bearish big shadow. It's got a higher high, it's got a lower low. It's got room to the left. There aren't a lot of candles in the way, so it looks good. And does the next so then what do? I put my sell order of 5-6 pip. Well, it's a 1 hour chart, so maybe 3 pips below the low. I don't trade a lot of 1 hour charts. I do occasionally, only in certain circumstances, like, for example, tonight's Aussie dollar. But normally I like the 4 hour daily and weekly charts. Those would be my favorites. And the 2 hour charts, actually, but not a lot of people trade the 2 hour charts. Okay, so this would be my order here to sell at 98.66. I put my stop loss up here above the high. The high on this candle, again, is 98.79, so it goes to 98.81, right around there. Now, I'm going to hit the F12 key and see what happens next. Boom, it triggers my order. So in this case, the very next candle traded lower than the big shadow, triggering the trade. What happens if the market starts inching upward and doesn't trigger my sell order? Well, normally I like to see it hit in one candle. But if it doesn't hit in one candle, if it doesn't trigger my order, sometimes I'll wait. Especially if it's a lower time frame, like a 4-hour chart. But I usually lose patience, and that's what I've done on the Euro CAD, is I've really lost patience waiting for that trade to trigger. So in this case, what's happened is the market's pushed through my sell order, so my stop loss is here. I still haven't hit my target. I've just missed it probably by about 2 or 3 pips. And now I get cashed out. So now I move my stop loss down to break even. So now I've got a risk-free trade, right? And then what I want to see is I want to see the market get down to here and cash me out here at 98.47. And let's see if that happens. Or it'll come up and stop me out at break even. Nope. There we go, and it's finally cashed me out. So that would be an example of a 1-hour Canadian dollar big shadow trade. Now, where a lot of traders get into trouble with the big shadow is they take it in traffic. And I tend not to do that. I tend to... Or the other thing is the big shadow isn't the largest candle we've seen in the last 5 candles. Notice this candle right here, this big red candle, is the largest candle. It has the largest range from high to low. It's bigger than that one, that one, that one, that one, that one. All of these, we'd have to go all the way back to this candle here, which was, I don't know how long ago, but a long time ago. 15 candles ago. And that's really ideal. A lot of traders miss out on there's 2 important things while we're on big shadows. There's 2 things that I've noticed that to me are mistakes. I don't know. Maybe, I wouldn't do it, but I know a lot of traders that do it. One is the big shadow. The big shadow is small. Remember, I wanted to see it as the largest in the last 6 candles or so. I know sometimes I say 5 and sometimes I say 6. It just depends on my mood. But really, 6 is safer, right? And then the second thing is that the big shadow has room to the left. Now the room to the left thing is kind of tricky, but should have room to the left. A lot of traders, what they'll do is they'll take them in traffic and they end up in big trouble. And why do we want this rule where it's, room to the left? Because if it's got room to the left, it's likely to be a swing point. If you take a big shadow in traffic, it's not likely to be a swing point. It's like here's an example. Here is an engulfing candle, but it's not to me a big shadow because the wick isn't lower. Also, I don't think it's the largest candle we've seen in the last 5 candles. I think this one's a little bit larger. Anyway, so you see this and you think, oh, well, this is pretty good. Well, the problem is that these candles are almost entirely in the same area that this candle printed in. They don't really stick out away from recent price action. And so therefore, what happens is that it just chops around here, like that. Whereas this candle right here was nice because it moved away from recent price action. Recent price action was down here, and this was a nice extension. It's also why I like the pound CAD setup. Hey, look, the pound CAD's come back. If the pound CAD fails here and closes below 56.35 on this 4-hour candle, well then guess what? It's printed at an area of the chart here, these 2 candle formation. Although it's not a bearish big shadow, it is a really nice extension, and it kind of looks like the market's gone too far. Most traders, this is the big shadow right here. We actually took this one last week. Most traders sort of like to take reversals. They don't like to go with the trend. And so if we're going to be a reversal type trader, we might as well wait for the very best ones, which are always going to be on the edges of the chart. We don't know that it's going to be the turnaround point, but we do know what they look like historically. Here's the Euro CAD. This one's, this is what I was talking about with, being impatient. By having my order down at 33.12 and selling below the low here, I actually probably avoided a losing trade here. And the reason why I say that is because it looks really bullish now. Could turn around when New York opens. What time is it in New York? 6:30. It could turn around in New York when New York opens, but it's really looking ugly, and it's probably going to get to where my stop would have been. It's only 31 pips away now, before it gets to my entry order. And if that happens, it's trade over. I'm not going to take the trade. A lot of traders would have got in on a retracement here, and while that allows for a really tight reward-to-risk ratio and allows you to really make big money, it also reduces the win rate by not waiting for the market to prove that it wants to go lower by taking out this low. So, to me, it's worth it to just wait. And I actually still have my entries in there because the market could end up making a long wick here and a red candle at the end of the day. I mean, that's been known to happen. So we'll wait and see what New York has to say today. Hemant says, what other patterns do you like a big shadow and kangaroo tail? Well, make sure you read the book. I mean, if this stuff interests you, and to be honest, I really don't care if you read the book or not. It's called Naked Forex, okay? And my name is Walter Peters, and you can look at it any English bookstore, okay? You'll find it in the trading section, if they've got a trading section. But there's like 8 or 9 chapters on different setups. But we eventually talk about a lot of them here at the webinars. There is a Kindle book I think you can get. Yeah, I think you can get it on Kindle. I'm not sure if you can get it as an ebook. I think you can at some places. Yeah. But I don't own the rights to it, right? The publisher does, so I can't just give it away, and I don't have it anyway. I don't have it to give away. So the publisher owns that book, so they make all the money. That's why I say I don't care if you buy it, because I don't make a lot of money from it, like 95 cents or whatever. Who cares, But if it helps you, I'm glad, so get it. But if it, it's not. This isn't like the way I make money by selling books, So it's up to you if you think it's worth it. So okay. What other patterns? There's something similar happening right now on the CAD 1 hour. Let's take a look, Gabriel. Gabriel says something similar happening on the CAD 1 hour. Yeah, right. So, okay. So on the CAD 1 hour, I was waiting, on the CAD, last week the market blew through this area, and I was hoping that it would come down here and give a nice bounce somewhere in this yellow area where I drew the arrows. It didn't. It did. It came down here, and then it printed a green candle here. So I guess the first it happened a little bit faster than I thought it would have. The first sort of bullish candle was right here. And so in that instance, what you can do is you can just put your buy order above the candle and just wait for it to go. That's what I call a retouch tap trade. Basically, the market breaks through a significant area and then it touches it again. Very similar to what the Aussie looks like right now. You get a breakout through a level, and then you wait for the market to pull back and hit it. In this one, I didn't actually take it because I was sleeping when it did it. But this is the high here, which is a nice target. You can see it was achieved with this candle right here. It took some time. A stop loss below this candle would have been all right, and survived this pullback. However, a stop loss below this wick would have been better to me. And at this stage, what we see is the market's gone through these high here, and now it seems to have settled here. And maybe we'll see a big boom green candle up, and it's going to keep stepping higher. We'll see about that. Hemant, are you in India? Drew wants to know. Hey, Indians, you guys can't trade Forex, right? It's illegal, isn't it? I don't want to get anyone in trouble, but that's what I heard. No, he's in Australia. No, he's in Australia. That's correct. So if you're in Australia, you can trade Forex, but if you're in India, I don't think you can. All right, so here's the euro, looking pretty ugly because I sold up here. It's coming back up. This would definitely be almost a big shadow. The reason why it's not, technically, it did take out this candle, and it's down here near these lows. Didn't quite get there. But the problem, of course, is that this candle's larger. So it's not the largest candle in the last 6 candles because we see 1, 2, 3, 4. 4 candles ago, we see a larger candle. However, it does look like it's going to pull up here. I had a touch here and then another touch right here which was actually the one I took here. And so I was waiting for the market to sort of fall away from here and get down to 28.30. It really only got down to 28.36, so it missed it by 6 pips. But I think I might move my stop to break even. We'll see how this one goes. Dhruv says there are ways to trade Forex in India. Well, we don't want to get anyone in trouble, so we won't talk about them. That's pretty funny. Any charts that anyone would like to look at? I've sort of gone over the ones that I've got. I've got a trade on gold. I've got a trade on silver. I had one on the euro pound that I was hoping to take, but I don't think I'm going to. It looks very ugly right now, and it never triggered anyway. I'm looking to take one on the Aussie dollar when it gets up there on the 1 hour. Come on, Aussie dollar, you can do it. Get up to 96 and then fall tomorrow. What are the other ones? Oh, Euro CAD. I've just about thrown that one in the bin because it just looks ugly, so I probably won't take that one. What other ones? I think that's it for the dailies and the 4 hour. I think that's it. Yeah, use pending orders, pan on fire. What you've got on gold, says Lucas, it's a buy order. So here's all my levels. I got to stop at 13.20.50. Most traders, retail traders, are going to have a 50-cent spread. So I take that into consideration with these levels. I've got a stop loss at 13.20. I bought at 1460, targeting 14.53, and then 15.50. 14.53 is basically where it topped out here, and 15.50 obviously is where we've got support and likely resistance on the way back up. The thing I like about this is that it's really charging across this trend line, and it's squeezing up against the horizontal level, so it's usually going to break out to the upside. That's normally what you see in those cases, so that's quite likely. So I like that one. Do you always monitor your trades closely? No, not really. I usually try and give them as much room as possible. I find that if I babysit the trades, I usually suffocate them. Does that make sense? Most traders I found are very similar to me in that, having too many. Yeah, exactly. You have too much. Too much attention is not always a good thing, because you can overthink things. I really like to look at it and say, like the pound CAD's a great example. I really like to look at it and say, you know what? Either this is a breakout and I'm going to buy. See, the high here is 56.77, so I could put a buy at 56.80 or 56.81, 56.82 as a breakout play. Or if it ends up as a bearish candle, I could put my sell down here below the low and then put my stop loss above the high. So I've got to wait for the market to tell me what to do, and then once it does that, then we're off to the races. So I don't really know if this is going to be a buy or sell here, right? I just don't know. Jono says, even if you're profitable, especially if you're profitable, I believe the number one mistake that traders make is they take profit too early. It's really, really, really difficult to learn that. Deviant says, amen. A lot of times it's so easy when you're in a trade and you go, oh, I'm in profit, cha-ching, take it out, when you have got to have an incredibly high win rate to do that. Otherwise, it'll come back and get you. Edwards says he's taken profit way too many times. Yep. How often do you check your... I usually check my screen like 3 times a day. Ian? Get scared on retracements. Yeah, exactly. Okay, look, I want to look at some of the charts here, guys, because we had a bunch of requests from Edward. Aussie CAD is one that I'd like to sell. However, it's sort of in a consolidation range here. I'd love to sell it if it came up to 99 or $1 even and printed a bearish candle. But, right now it's just sort of chopping around. It's not like the Aussie. The Aussie to me is a lot nicer than the Aussie CAD. The other one you wanted to see was the Swissy. So let's take a look at the Swissy. It's such an interesting chart, this one. Really, I don't want to have anything to do with this chart. I mean, I guess I could say if it came down to this area, maybe I'd buy it. Maybe I could trade a 4-hour setup, but it's just not. Yeah, I mean, there are too many other good setups. It's giving me a 4-hour big shadow here, so this is a case where it's in traffic, but I tend to overlook the big shadows that are in traffic if and only if the big shadow takes out all of the candles to the left. So you can see it took out this one, this one, and this one. So even though it's in traffic, it also engulfed all these candles, which is a really good sign. So I guess if pressed, I would have to say that the Aussie or that the Swissy would be, to me, a good bet to sell here, sell on a break. It's already really, if it goes to 96.89, I could sell and put my stop loss above the high of the bearish big shadow at 97.92 and target down here. That would be a trade. That's actually not a bad trade. So it would be a high. So let's put this one up there. Stop loss at 97.92. And it's going to trigger. It is going to trigger that sell order. Sell order is at, where are we at right now? 91. So 96.87. That's my sell order. Actually, this is a pretty good trade. 96.87 is my sell order. Yep. And my target is 96.14. That's target 1. And then I'll show you target 2 as well. Everyone see why this is the case, because the market bottomed out right here. That's where it's likely to get hung up at. And the next spot, really the next spot is right here, but it's so close to this. I would consider it the same spot. So really the next spot is right here, which is around 95.45. Still, that's 70, 80 pips lower. That's it. That would be a nice trade. I like that trade. Selling at 96.87, stop loss at 97.92. As soon as it hits 96.14, I move my stop loss to break even, targeting 95.45. That is yeah, looks pretty good. And then the Euro Swiss. Well, the Euro Swiss, you'll recall, there's a weekly setup. I think we talked about this earlier in the week, but let me show you. Euro Swiss is right here. The Euro Swiss printed a weekly kangaroo tail, and it never traded at 23.99 yet. Still could come down, so we can still see it trigger 23.99 this week. Stop loss is above the kangaroo tail at 26.55, targeting 22.50 and 21.35. 21.35, of course, is these lows. 22.50, these lows right here. So that's the Euro Swiss. We talked about gold. Yes, Ian, I split mine up. Yeah, good job, Edward. Edward, were you the one that said the Swiss? Yeah, Edward was the one that said the Swiss. Yeah, that's a good one. I'm glad you brought it up. That's a good one. Thank you very much. That's a good one. Yep. It's going to trigger right now. There we go. S&P 500 is great for naked stuff. Agreed, 60-minute man. I totally agree. Let's take a look. I think I've got one here on my charts. No. I don't have it. It's on my other platform, but that's okay. No, I don't have it. Well, that stinks. No. That's brilliant. Yeah, S&P 500 is great. You know what's it's funny, like the charts that have more, the markets with more volume seem to be really, really good to price action. Like, for example, I don't trade a lot of the like choppy ones. Like, I'm going to pick one that I don't even know. Does anyone know what the HRK is? I don't know what this is. I'm sure it works just fine, but it's just so much easier if you're not paying a lot in spread and you've got a lot of volume and they just seem to smooth out. Like, here's a belt, but in traffic. Here's a kangaroo tail here, and that one worked. Here's a kangaroo tail there, and that one went up. Here's a bearish big shadow that completely takes out all of these candles over here, and then it fell. And where did it get hung up? Right where these lows are over here. Big surprise. That's not a big shadow, unfortunately. There's a kangaroo tail right there, and it did break the very next candle, retraced, and then went. Here's a kangaroo tail right there. There's another one right there. Both of them, the market fell afterwards. There's another one right there. That's not a kangaroo tail right there. So it actually works pretty good on this one too. There's a big shadow right there, although it's not the largest candle, so it probably doesn't work. Doesn't count. You can't count that one. That's cheating. There's a brilliant kangaroo tail right there, which triggered on the next candle, and then it just went. So actually, I don't know what the HRK is. Does anyone know? Is it Croatia? Yeah, I actually wondered about that. I've been there, and I was going to say that it's the what is the Croatian? I wasn't sure if it was Hungary or I can't even remember what the money is over there. Kuna, yeah, Kuna. Yeah, it is. It's a Croatian Kuna. Yep, sure is. Which actually it looks like a great chart to trade on the daily anyway. Okay, so let's go to the one that you wanted to see. Ozzy Yen. Ozzy Yen. And we'll make this our last one, guys. I think I already have one up, but let's just take a look. I'm going to go to the 4 hour because it's my favorite, and I'm going to go to the green and red. Let's see. Ozzy Yen. Wow. See, this is an interesting chart because the critical spot on the chart to me is this area here at 99.50. We've got a touch, and then it touched it on the way down. And now we're kind of hung up here. I don't know if we're going to break through, but we're back down to another level at 97.10, 97.15. Yeah, I don't really know what to say. I mean, let's see, what does the daily tell us? It looks like it wants to fall here, doesn't it? Which is fascinating because all of the other yen pairs are going up, or they're trying to go up. Yeah, I don't really know what to say. Are you long or short? Who wanted the Aussie yen? Reynold Benny, are you long or short? I mean, if today closes below yesterday's low, I would say it's probably going to go. It's going to break. But look at all of this area here. You got resistance, support. I mean, it's a pretty strong level. It's going to take a good push to get through. Right now, Jano, is when I love to trade European sessions. Garden dwarfs. What? Lucas is talking about garden dwarfs. I think that might be the wrong webinar. It's only 8:50 p.m. here. Australia. Yeah, I'm in Australia, Drew. Colin, it's only 8:50 here, yeah. What? And it's like, what, 11:50 in Portugal? I think it's 11:50 a.m. Yeah. Garden dwarfs. I don't know what Lucas is talking about, garden dwarfs, but Lingen or garden dwarfs. Let's see the daily New Zealand yen. That will be our last chart. New Zealand yen. Daily. Is a last kiss with retouch. Ah, yeah, nice one. Hey, does everyone see this? It's a nice last kiss here where you've got, obviously it depends on where you draw your box, but if you drew your box like this, you have a breakout here and a retouch, yeah. So the only thing that's ugly about this one is that yesterday's candle was a giant green one. But the other thing is I like to see the market move away from the box for a longer time. So I would have liked to have taken this from a 4-hour chart maybe, but not a daily. Either way, the 4 hours print is gone. The daily has not yet gone yet. So I like to see it move away for like 10 candles and then come back. And what's happened on the daily is it's only been away for like 1 candle. It broke here, had 1 day away, came back the next day, and then now we maybe have a sell. So to me, the 4 hours is the way to go on that one. Yeah. Yeah, my biorhythms are totally different than yours, Jano. I'm assuming you're in Europe. Yeah. Garden dwarves are traded on the Japanese market, says Lucas. Okay. All right. All right, guys. Thanks a lot for spending time here, guys. Thank you, Drew. Thanks, Linda. Hey, Linda, I didn't see you. Oh, Suhan. Thanks, Suhan's here. Thanks, Edward. Thank you, Ian. Thanks, Pan on Fire. See you, Gabriel. And I'll see many of you in another webinar in 10 minutes. 10 minutes. We'll see you at the Daily Trader. See you next week, guys. Bye.